just kind of recapping 2020 and how crazy of a year it was in the markets and what you can kind of take away from that. The US economy shrank in Q2 at an annual rate of 33%. Of course, this is due to the pandemic and the unprecedented shutdowns, if you haven't heard that word enough, which resulted in a market decline in the US to drop by 34% from peak to trough, 34%. And when you look at foreign markets, emerging markets, pretty much 33, 34% across the globe. And even bonds were down almost 10% in the US, even though there continues to be civil unrest, just tons of other terrible news. And what happens during all this time is the market comes roaring back 70% to finish the year at positive 18. And it just goes to show that the markets are completely unpredictable. And then I was listening to a podcast by Josh Brown, and he just summarized this so perfectly.
The stock market has this aloof, almost alien quality to the way it behaves that can be shocking to an outside observer who hasn't had a lot of experience with it. And the longer I'm doing this, the more I realize how little I know. And that includes how little I think I can predict about how the market will handle a given tragedy or election or major geopolitical development. The longer I'm doing this, the less confidence I have in my ability to figure out what this alien stock market is going to do in the wake of a major event. And I think it takes a level of humility and maturity to reach that point as an investor. And I reach that point, I come closer to reaching that point with every passing day. The longer I'm doing this, the less I know.
The longer I'm doing this, the less I know, or the less you can make predictions about what the market is going to do and react to some type of major event. In that podcast, he goes on to talk about how the market, how insensitive it is. And like when, for example, Hitler invaded Poland in 1939, the markets went up on the next trading day, 9.5%. Like, it just doesn't make sense. So my sincere advice and things you should actually be doing, really try to focus on the things that you can control. What are you spending? What are you saving? Also, your opinions are not an investment strategy. You might feel one way and the markets could feel a completely different. So make sure that those are not mixing. Use the market as a long-term wealth building tool. If you're in the longer you're in the market, the more of a chance you're going to have of success. If you're trying to day trade, you might as well just go put your money on black or red at the roulette table. But if you look for long periods of time, statistics are going to continue to be on your side until, if you're going over 15, 20-year time horizons, there's never been a time in the market where you lost. So it turns into the opposite of gambling. And of course, have liquidity. Make sure to have your emergency fund. If you need cash on hand, we don't want to have to use debt, use credit cards, or try to sell your investment portfolio, because usually when there's an emergency going on, the market could be down, and then that's how you really shoot yourself in the foot. Stick to your plan, and happy building wealth.
I get a 24 real good time, 2 10s, I'm not trying to go crazy.